What is up, Bullish Bears people? Thank you for joining me. This is Jeremy, and this is the beginning of the series, or the second video in the series I'm making for the option swap strategy series. And effectively, I've come to discover this strategy, as you may know if you watched my last video, while I was trading in Robinhood, and my account size was under PDT. This strategy made it so I could keep profits from price action as if I was day trading, but without actually day trading. And it's really kind of a neat thing to do with option strategy. Just to remind you that you will need to have level 3 options trading ability unlocked, or tier 3 options trading, they call it. So you kind of want to respond to the broker. They're going to ask you some questions to qualify for that in a way that would make sense to allow for being able to trade tier 3 options. So once you've unlocked that part of your account, you can start doing this, and you don't have to really have all that much money in the account to do it at all. And realistically, this thing has been an absolute dream to trade because of this particular strategy. I know a lot of people knock on Robinhood, but hey, man, commission-free options trading, that is glory. Don't ever forget that. If you could get commission-free options trading from TOS, man, that'd be even better because the platform is pretty awesome. But unfortunately, you're going to lose a little bit for commissions. But I'm going to run this with a visual based on TOS because I really have a hard time demonstrating this strategy in my Robinhood account with a screen share. It's much easier to demonstrate with TOS here. So I'm going to go ahead and do so. All right, so first thing is first, always price action is life, okay? And in this situation, on a Thursday afternoon, we had pretty much a very steep sell-off in the market trend already. This is after it kind of broke over bearish on a longer time frame. I have it paused right now so I can kind of show you. Let's go ahead and zip back quite a bit. This is about that point where things started getting nasty and the trend was on, but we set up for something that was a little bit bigger than anticipated as far as most day traders go. Getting in a daily here, we have essentially broken the support from the top of this peak in the previous trend after breaking over. We were becoming more and more bearish here, and we had some targets down below that were pretty sizable, so we could make some pretty decent bear trades on this trend. And although I can day trade all I want, now I'm above PDT, I still love being able to teach these strategies to kind of show you guys how to kind of even the odds when you're under PDT rule. So let's get to it. I'm going to go down to a 1-minute chart and show you what we saw that was effectively ready to break. And this was it. So we have a really nasty big old bear flag here. It looks a lot like an inverse head and shoulders. You got your low here, a head here, and a shoulder here, but it failed. It didn't break the neckline, and that was after 2 attempts. It still couldn't break that particular accumulation. So it was definitely going to be breaking over. And as soon as we noticed that the wedge was breaking here, if we drew an angular support across here, we would see that this wedge was failing and we were ready to go bearish. So that's what I certainly did. I tend to look for my entries in the middle of the day also for another reason. Anytime realistically between 11 and 2 is pretty ideal because you usually get kind of a sideways lull in the day, typically, unless it's a trend day. In this case, it ended up being a trend day, but this is the time of day where one of the best things that happens to the options chain. The implied volatility, unless the market has been quite volatile, is relatively low in the middle of the day, and it peaks in both the opening hour and the closing hour of the market session. So this is about an ideal position to get into your long side of this. So I'm going to go ahead and hit the play button, and I'm going to be looking to do a put spread strategy on this, but I'm going to show you how to leg into it, and this converts it to being a swap strategy or an adjustment to an existing long bearish position. So let's go ahead and hit the start button, and I'm going to go straight to the options chain on this, but first let me double check. Good, I have reset the account so we can get nice even math and make sure we can kind of figure out what our profit is. So this is being a Thursday, this would be the Friday right here. Wait a minute. No, that would be the Friday. This would be, gosh, what date am I on here? August 17th. All right. So effectively, we want to go about 3 days to expiration or 2 days to expiration. So this would have been the following Monday. Sorry, I got a little confused here. Going back and running over stuff that I've done, kind of nuts sometimes. So we're going to look at the put side of the options chain, make sure we're in the singles. And we want to look for that magic number around 0.29 to 0.30 delta is typically going to be where we're at. But in this case, they weren't quite pedaling at the right price range. I can actually get a lot better position right at about 0.26. So we were pretty much right in a sweet spot. I tend to just look a couple days out to expiration, 2 to 5 days out is typical, and I want to look for the contract that's going for about $100, and typically it'll have a pretty high probability of being in the money at some point anyway. So I'm going to go ahead and buy that from Ask right at about $100. I'm going to do 1 so we can make some easy math, and I'm going to send that. Boom. Okay, so we've locked in, and essentially we're going to watch this position magically appear in our portfolio, and even if it starts to lose a little bit, we'll be okay. I'm going to show you why in a moment here. So let's go back to the chart. That position, or that wedge, just broke and started selling off really quickly. Glad I got into that position quickly enough. Later in the day, this became quite the show. So let me go to about 3:30, and then I'm going to show you how to swap this strategy. And bear with me. Sometimes I have trouble getting the times perfect in this thing, and being on TOS On Demand, it's a wonderful feature because you can back test option strategies, but you gotta kind of play with it. Sometimes it's a little finicky. All right, so we broke over up here from this wedge. We made a nasty bearish trend all the way down from around like 440 down here to about 435-ish. We made almost a $5 move. Started a reversal here, this double bottom. It cleaned. It broke the R1 high, or resistance first high after the first low. So we knew this double bottom was likely to kind of bounce here. It would be wise to lock in all of this profit. But if we can't day trade, or if we have the anticipation of further decline the following day, we're going to go ahead and lock this into a debit spread that is open for a net credit. And you can see our strike is just in the money now. So let's go ahead and sell the short leg of this right here. Sell to bid. And I'm going to make sure I only sell one, because I only have one long position. And I don't care what this number is, as long as it's more than I paid for it, good. Go for it. All right, so let's go look at our position and figure out the details. So we've locked in $49 profit in this position that we cannot lose. It's a dollar wide debit spread built for a net credit of $49. So cannot lose $49, whether price goes racing to the moon after this, or this expires worthless. Doesn't matter. We get to keep our $49 for doing absolutely nothing. I'm going to do you one better, though. So the width of the spread is $1. Maximum profit is a whole dollar, but usually you're going to have some extrinsic value variation on that. That the most you could possibly get for this thing is like 98 cents, and that would probably be if it was in the money on expiration day, and I mean a few strikes in the money. It'd have to be right around there. So it's really difficult to get maximum returns on a debit spread like that, but you get pretty dang close. So the theoretical max return is 100% of the width, but it almost never works out that way unless you get early assignment. Then that's a different story. So if I get assigned early on the short leg here, and I have to exercise my long position to cover it, I get to keep the full width of the spread right to the $100 mark, or $100 per width, plus that $49 that I've locked into this position. Okay, so the idea for the strategy anyway is to capture the profit in the position of a long option without having to day trade, and potentially make a lot more, because we still have $51 that we can retain in this spread if it goes in the money. So let's go ahead and fast forward to the next day, and right at the opening bell is what we're going to look at. So I'm going to go ahead and set this to 0930. I'm not even going to go precise. We'll just hit it. Get the chart open. We can see it hit a bottom right at the open. We can see that it made a really nice move beyond that low, quite a bit beyond that low. So this whole system is going to be in the money. Let's go ahead and go back to our monitor. I'm going to let this finish pre-buffering. It takes a moment for this to go back and look at all the data, and it has to track a lot of data to do this. So TOS is a bit clunky in that respect. It does take time to process a lot of stuff, but there's a lot going on there. Okay, so let's have a look at this. Now we've got all of a sudden a P&L of 107. So we've got our $49 plus most of the width of the spread because they're both in the money, and they're both pretty deep in the money. So we're going to go ahead and just close it. We can click right click on this, drag it down, and we're going to close it as a vertical. Make sure this says sell one vertical SPY spread. Okay, look at what we're getting for this thing, 57 bucks. All right, well, price is starting to run back to the upside on the open here, so we better act fast. We want to capture that. And ideally, we want to capture the heightened implied volatility of the opening hour as well. So let me go ahead and close this thing. Typically, if it's fluctuating, between a couple pennies here and moving up and down a little bit, I want to try and just hit the damn order as fast as I can. If I got to work it later, it's okay. In this case, it filled immediately. Cool beans. Now let's go back and look at what we made. So we made our $49 plus we made an additional $57. So we can add the two together. We get $106 profit for the day without breaking a sweat. We didn't have to lose sleep wondering if price was going to go against us with our long position. And we are able to capture above and beyond that spread value after the fact. If, like I said, if this thing were to rip the other way and go out of the money, expire worthless or whatever, we can't lose $49. We keep that. That's ours. And if you're running these in size, you start to get to a point where your account can handle running these by the 100. There's some serious cash to be made there. And eventually, if you keep doing this successfully, even moderately successfully, you'll build up some account capital to where you can start making some pretty serious moves. Later in the series, I'm going to show you a couple other additions to this strategy where you can do this with both call and put debit spreads that are open for net credits. I can also show you how to use a range day where price is kind of staying in a sideways channel to lock those together where they trap profit between the two spreads, as well as even later on than that in the series, I can show you a way to convert these into an even more complex option strategy. The only downside is once you start adding more legs on this thing, you got to remember, if you're doing this in a commissioned account, you're going to be paying a premium for each of these contracts. So typically, most people can get about $1 round trip per contract on TOS. I know Robinhood's making theirs a penny, which is nothing. I can live with that. Primarily, I trade this strategy on my Robinhood account, but I needed to be able to demonstrate it visually, so I opened a TOS account just to produce these videos, as well as make a few bucks. So anyway, thanks for joining me. Stay tuned for the next few videos in this series. I guarantee you're going to love them, and I'm going to also eventually show you even the worst case scenario in this can still make a profit. It's pretty sweet. Thanks for tuning in. We'll see you next time, guys. Thanks.